Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. I'm Mark Gardner. It's the 3rd of August, first day of the month, and the AI trade was back on Friday with the hyperscalers as the AI cloud bounce. As you can see, Microsoft followed up their best day in since 2008 with another up 3. Amazon was up 15% on the back of their cloud growth. Google obviously bouncing back a little as well. Even Meta. Saw the chip stocks get hit a little bit, and there's a little bit of uncertainty around. We were sort of talking leverage and we're talking retail leverage, but the big victim of the leverage was this Situational Awareness Fund, which was from one of the OpenAI prodigies who, very good at large language models, not so good at risk management. He basically had to sell out after being up around about 800% at one stage. He had to sell his fund to Citadel, which, is basically, you can probably ring the bell for the low when Citadel buys you. But they all got squeezed out. We saw limit up in Korea on Friday, and the sort of market shutting there. Apple got hit on the back of component costs going through the roof as well. Samsung did have an update. I haven't really gone into whether it was the earnings or not, but they are forecasting worsening memory chip crunch. Which, I suppose they would, because they make memory chips, right? So, I think Apple's quarterly growth guide was a little bit underwhelming as well, but everyone sort of flooded back in because the gap between the how much they're going to spend and how much revenue is growing is not as wide as people feared. It's all the money got sort of sucked out of everything else and straight back into the hyperscalers. So it'll be interesting to see how long it lasts. Because Amazon's report was not. I wouldn't say it was great. It was okay, and it missed on a few things from their usual business as well. So it'd be interesting to see what happens with the. I think the SOX was down 20% for the month. It's worst year since 2008. But look, on the back of a ridiculously well bid sort of 6 months leading up to that. We did have some interesting stuff happen in the currency markets, and pretty not unprecedented, but pretty unheard of. The US and Japan coordinated buying of the yen over the weekend. The US, and it was leaked, as per usual with Trump, it was leaked into from a note on President Trump's desk from a photo. But they're selling euro to buy yen. The reason they're doing that is because basically the Japanese are the biggest treasury holders in the world now. Now that China's largely exited, and if they needed to support their currency, they're going to need to support it basically by selling treasuries, which the US does not want, with 30 years at fairly close to 20-year highs. So 10-year yield was up 5 basis points at 4.7. The 30 years was at its highest level since 2007 as well. We had, it wasn't a mad bounce on Friday. It was just, it was a percent or so. And the Nikkei obviously jumped up on Friday, but there's not too much, a little bit of window dressing on the, at the end of month, I would say. We got Palantir coming out in the next 24 hours. We've got SpaceX on Tuesday as well. And then there's that massive release of shares. 20% of SpaceX is going to be available, or 20% is going to be released by the 6th. And we will see what happens there, because SpaceX not doing so well. Certainly not 1.77 trillion market cap at the moment, because it's at about $108. And it's sort of sitting towards its lows since it opened. Qualcomm and CVS. Can't imagine Qualcomm's going to be great. I think we've got Eli Lilly on the Wednesday as well. I don't know why that's not up there. Pfizer, and we start with with some of the Aussie earnings as well this week. REA Group, ResMed towards the end of the week, and obviously payrolls on Friday, which is going to be the big economic number for the week as well. So no one's really going to care about Berkshire Hathaway because they're basically just T-bill traders now. So yeah, we've had oil drop 6% on the open on the back of Trump basically saying that they're not going to attack, or he called off attacks. He said that Iran wants to do a deal. Iran's denied that. I mean, look, it's Groundhog Day on that crap. It's just the usual cycle of complete crap. And we will see what happens when he doesn't get a deal in about a week, and then he starts attacking again. I think the Iranians know that he's not going to hit their power plants, because basically that puts out oil supply for quite some time, and then it lengthens the issue. So we had an attack, I believe, on some. We had an attack in Russia. A bomb went off. There's been a lot of conspiracy theorists, saying that it's a false flag. The CPC terminal in Russia's Black Sea got hit as well. That threatens Kazakh oil exports. And hedge funds boosted their WTI longs by about 25%. So the most bullish since mid-June. There's a fair bit going on there. So I wouldn't say that this is necessarily over. I just think everyone's just a little bit sick of this ridiculous cycle. Last week was incredibly volatile in the chip stocks. I might even have the bit of paper here, but I think we had a market that was essentially down 10, down 7, down 9, down 8, and then up 30 for SK Hynix, and I think Micron was pretty similar. Was pretty whippy. So obviously, our very, the pun, chiplash. But have a listen to that this week, and sort of catch up with what's been going on. But essentially, both of them still ended up down about 3% for the week, or 5% for the week. Micron fell away on Friday again as well. So there's still a fair bit of volatility left. But it with any luck, I think there was a lot of that retail flushed out, and a lot, obviously, the OpenAI bloke with the very poor risk management, he's been flushed out as well. So you probably expect them to stabilize a little bit, because they are in single-digit PEs, these guys. And if Samsung's right, then obviously, we're going to see continuing shortages. So. But for those of you out there who want some income and are pretty sick of the volatility, and you're pretty sick of the ASX earnings volatility, which was the last 2 to 3 earnings seasons has been absolutely annoying. Have a look at our income series. You can go to mpcmarkets.com.au/income. For those of you who are first timers, we do the banks, usually for the people first time. We got an ASX diversified basket, which is a little bit higher, around 12.5% as well. Occasionally, we'll do some US baskets as well. They'll be running this week off the back of sort of buy the dip is now closed, and we will. If you're sort of replacing some hybrids, or you're looking for some dividend income, and you just want to actually sleep at night, as opposed to be fretting about the fact that your stocks could get blown away like they did last earnings season on the ASX. Have a look. It's also on the homepage as well, and just go and register your interest. Go and watch a couple of the videos. Excuse me, and get your head around a little bit. It's for sophisticated and wholesale investors only. Unfortunately, we can't do these for retail. But look, if you qualify, make sure you have a look at these, because they're a great way to get some really consistent income, and without the stress of all the the stock movement overall. So. Look, people, have a great week and have a great day, and we will speak again tomorrow.